NASDAQ, probably not the kind of markets for you, because they are very, very, very aggressive, very fast moving, and they will freak the bejesus out you. So in that type of situation, you want to be very, very cautious about selecting a market that really doesn't fit your personality. If you like a bit of action, if you like fireworks, and you get bored otherwise, NASDAQ and gold become very, very good markets. If you prefer markets that are a little bit more stable and have bigger macro narratives, then of course oil would be a great market to choose. Oil would be a very good market. I like, as I mentioned several times, I like sterling as a great forex market. Sterling dollar is a great forex market. Pound yen is a great forex market, because you've got the right beta narrative in those types of events, the right narrative that sets up behind those events. So when we start to think about the right market for you, if you're a bond trader, the good thing about bonds is you're allowed and able to go into the slower bonds to start your trading off with. You can start off with trading 5s and 10s to get a feel for the bond market. And as you start to become a little bit more in line with and in tune with bonds, you can go up to the 30-year bond, of course, if you're starting to understand it better, because you're obviously going to get a bigger bang for your buck, but you're obviously not taking as many risks with that bit of business. What happens is, of course, if you start with the 5s or the 10s and you go up to the 30s, you end up doing some 10s and then reversing out some 30s, and you end up with some knob spreads or fob spread trades without even realizing that that's exactly what you're doing. You're buying 5s and selling 30s. You're obviously in a fob spread steepener, and that might be something you start to recognize as a bond trader. And obviously if you go full throttle on bonds, you're trading the ultra bond, which is obviously a lot more akin to some of the other commodity markets. Very, very fluid, very, very, very volatile at times, make a lot of money, lose a lot of money very, very quickly if you're on the wrong side of big data. So you've got to choose a market that has a personality that suits. If you don't understand much about soybeans, why would you trade soybeans? If you don't understand a lot about whatever market you're trading, bearing in mind if you're trading things like Forex, fundamentals are very, very important, because the Forex market represents the net positioning of a currency, the net positioning of a country against another country, the various elements that country has over the other one in terms of the carry trades, the pension fund adjustments, the macroeconomic factors in the background. And when we think about those, I've mentioned many times, there's really only one market that I don't trade, and for good reason. And the only market that I think is the biggest dog in the world is the euro dollar. And the reason for that is because it doesn't have any real consistency in terms of drivers. I've mentioned this many times in the past. The dollar euro is the dog market out of all markets. I think you'd probably all agree with that, because there's reasons why it goes up and there's reasons why it goes down, and it's not the euro component that causes that, it's the dollar component, of course. Trading the euro against the Aussie dollar, you lose an awful lot of that type of narrative, that type of baggage that the dollar carries with it. So the dollar is a standalone, is the euro dollar obviously making up the majority of the dollar index, is the biggest dog of all, because it has all of those elements. It's the dollar goes up on good news, the dollar goes down on good news, the dollar goes up on bad news, the dollar goes down on bad news. It's all over the place, isn't it? It doesn't have a consistency. And that's what we start to recognize when we're trading is, does the market do what we want it to do when we think it should be doing? If it doesn't, it may well be you're in the wrong marketplace. It might be you're trying to trade the wrong things, and you've got to understand what's making it drive. If you're not understanding it, why are you trading it? Makes sense? It's one of those things, if you don't get it, don't do it. It's like a relationship. If you start dating somebody and you can't understand their crazy mood swings, what the hell are you still in the relationship for? Get out. It's going to be far better to deal with. You know what I mean? So markets are exactly the same. It's a relationship you have. You're in a relationship that makes you a lot of money, but can also bring you a hell of a lot of heartache and a hell of a lot of financial loss as well. So make sure you choose your partner wisely. Make sure that when you do choose your partner to trade with, that you choose the right partner. Choosing the right partner is such an important aspect of getting your formulations right. And when we look at this, we can start to see the formulations. We can start to recognize it. And if you get it, right? If you start to get that narrative, if you start to understand that narrative, it's personal to you. It's personal to you. A lot of people will say, I hate the gold market. I detest the gold market. It's so choppy. It's so stop runny and all that kind of stuff. And then you've got somebody that says, but that's exactly what makes it appealing to me. It's the same in a relationship. You might see somebody and they say, I don't like somebody that's so fiery. I don't like somebody that's such an extrovert. And the next person says, I love extroverts. I love fiery people. Completely different. It's not a right or wrong, is it? It's just a personal choice. And that's what we're saying. It's a personal choice. So when we're looking for that relationship, because we're going to spend we spend more time with our market relationship than we do with our relationship, right? We spend more time with our market relationship. We really need to be in a relationship that we enjoy, that we understand, that we can make money off of. Well, I've not been with a partner in my past that I've ever been able to make money off of in the past, so that's fair enough. But the markets are different. So when we think about the idea of relationships, we think about the idea of the market being a relationship, it becomes a little bit more obvious that choosing that right relationship is vitally important to your success as a trader. If you get it, you get it. If you understand it, you understand it. It's going to be so much easier to make money with it when you understand the narrative. If you don't get it, what the hell are you still in it? It's like an abusive relationship. Get out. Find another one that works for you. Find another one that actually fits your personality, your order flow, because order flows are a very, very important part of understanding the relationship. It's what happens when you get to know the asset class more intimately, as we start to see the size of the block trades, when the block trades come in, the settlement prices, the areas that are important to us. We really get to know those prices in those areas and the volumes and the whatever else that comes into the marketplace. So when we start to recognize those pieces of the jigsaw puzzle, we start to put it together, it still might not make sense. But obviously that's not necessarily the same as an abusive relationship. It might not make sense, but it might make sense in due course. You just have to either stick around and try and understand it, but at some stage you've got to say, you know what? I don't get it. I don't get it. I don't get this market at all. Well, what the hell are you sticking around for? It's time to move on. And the sooner you move on in that type of relationship, the better. Far better to find something that works for you than something that constantly causes you to scratch your head and say, what the hell is happening? Makes sense to most people? I would assume so. You've all seen it because you've all probably started out in one market, moved to another market, and then maybe went back to the original one because you've realized that perhaps the original one makes more sense to you than the new one. But it's just a case of trying to find that market as early as possible. Trying to find that as early as possible is very important for you guys. Once you can understand, the market as early as possible, then it's quicker to get into a profitable position in that market, isn't it? It's quicker to get yourself into a profitable position because it makes sense, and if it makes sense, you'll probably be making money. If you're not making any money, it's obviously not making sense to you. Is it time to change, or do you think that there is more for you to learn that'll allow you to make sense eventually of that situation? That's where you've got to try and get to, guys.